Hi, my name is Kalijan Khalif, and this is the Pro ESG project that we are running on behalf of joint stock company Altyn Bank. The main prospect of the project is that we are making sure that all the stakeholders are enrolled into the business integration of the sustainable development concerns and as well the ESG. For that reason, today we are hosting one of our very special guests who've been in the business for more than 30 years, taking the big roles in the international financial institutions as Merrill Lynch, UBS, and as for Kazakhstan, being developing the first Kazakhstani IPO, and being the financial advisor, being the senior financial advisor to the Prime Minister of Republic of Kazakhstan, as well as participating in the restructuring process of Allianz Bank, BTA Bank, Temer Bank, currently holding one of her positions as the independent director for the Kazakhstan Investment Corporation. And today we are hosting very special guest, Marsiei Elizabet Kристиан Фавале. Ms. Фавале, we are very welcoming you. It's a pleasure to have you here today. And we are hosting you with one of our very special specialists in the area of the business industry as well, banking business industry. So we are with Deputy Chief Executive Officer for the joint stock company Altyn Bank, Ms. Жанар Hakimbayeva. Welcome.
Good day. Welcome. Thank you.
Thank you so much. Thank you for being with us. And I would like to call you Ms. Fawale, if you don't mind.
I prefer you call me Marcia. We're
Marcia.
friends here, right?
Yeah. That's
First names?
Nice.
Is that better?
Yeah, that's good. That's very nice. So if you don't mind, can you give a start on the term? Maybe you would like to give some introductory things as well?
Yeah, sure. Well, first I want to thank you, and I want to thank you for having me. I think this is an amazing effort. I think more education is needed to understand about ESG in what it really means versus what people think it means, versus some of the misunderstandings about ESG. And really we'll take this from obviously a finance concept, but I think that we should interject what it means to everyday people, everyday borrowers. So we have a holistic approach to what that means. I just want to clarify one thing. I didn't participate in the BTA Alliance and Tamir restructuring. I created it.
Okay.
So I always think it's important that
My mistake. My bad.
No, not at all. So I'm the person that created the burden sharing framework that became a global framework, and obviously with the backing of the government, which would have never happened otherwise. So that was a very, very important benchmark deal in the world, and it brought Kazakhstan even further into the financial fabric, which is important to state. But yeah, so I would love to give an introductory remarks just to frame ESG. As you know, I just came back from the Emerge Summit in Baku, where I gave the keynote address about responsible banking beyond ESG. So how does discipline drive the economy? And I want to share some remarks. And I think that sometimes people only think that ESG is about feeling good, which is not a problem. But let's go back to the discipline. Every great economy is built with trust in capital and how that capital is allocated. ESG in our lifetime has raised the awareness, and as they say in English, the bar, by raising the expectations about how capital should behave. This is the key. How should capital behave? It should be cleaner, fairer, and better governed for the benefit of finance and the people. So finance didn't just embrace ESG for appearances of moral character, although you should have a moral compass. It is about finance, not politics. It's about finance. So now you can't avoid ESG. And I think this is important, Kalizan, to understand. It's because regulators are imposing it, investors expect it, and clients are asking for it. So when we think through the question of ESG, the real question is, how do we do it? It's not, should we do it? And how do we build prosperity in the backing of that? And I kind of go, some people turn around to me and say, well, why should we pay attention to this? Who cares? Why is this important? And I'm doing a monologue because I want to set the context correctly. The ESG bond market is over $5 trillion. It is almost, I'm going to say it. It is irresponsible for banks not to participate in this. You're leaving money on the table. So From green bonds to social bonds to sustainability-linked bonds to blended finance, these are all opportunities to create capital, to make capital have impact, and to even create new businesses or improve businesses. So this is not a niche market, it's a mainstream market. And finance has embraced ESG because we have climate shocks, we have social instability, we have governance failures. Just think about Enron. Way before we started ESG concepts, right? Credit losses, liquidity stress, and valuation gaps are a real problem for banks, and we cannot ignore ESG any longer.
Sure, then, Marcia, well, if the way you are stating it, I mean, the process itself, you're saying that we are already there, so it's not an option for us to discuss whether we are accepting it or not.
Correct.
Yeah, but generally still, you've been saying some numbers as well. In one of your interviews, you've been giving some hints to like 64 trillion US dollars. So previously we've been discussing, during a drive, that's okay. We've been preparing ourselves, for the program. It's normal,
Good.
We've been discussing the matters, and you said that, okay, the money are about to be allocated. However, the understanding on the side of the business is still not clear.
Correct.
So what do you mind to state? I mean, do you mind to give your idea maybe on that matter as well? If the ESG is for the business, first of all, why then the business itself is not accepting it freely? Why there is like so many difficulties and it goes so tightly? I mean, in terms of the perceivance, in terms of how we accept it as a business.
So I think to begin with, people don't understand what ESG actually means.
Okay.
They think it's just a feel-good factor and everyone's trying to be good people, which is a good thing in itself. So ESG means E for environment, S for social, and G for governance, right? But what does that actually mean? It means that collectively, when you look at investments or you ask for lending, that there's a different criteria in how you should be assessed. Because we tended to, in the past, focus on quarterly earnings, short wins, and profitability. So one of the dexterity of thought that people have to have is, what is profit? Really? Let's be a little intellectual here. What is profit? So if a steel company pollutes the water in the process of doing steel, I'm not picking on steel companies, I'm just, you know what I mean, making it an obvious thing. So they're selling and they're doing their rebars and they're doing hot rolled, cold rolled, galvanized, all these beautiful things, and they're making quarterly earnings and they're paying the loan back. But if they're polluting the water and the air, then the people can't drink water. They have to buy bottled water. That is therefore a burden on people's economic and health impact. Governments have pollution in the air. They have to pay more for wellness. I mean, just think about preventative health care goes up because people are getting sick. So is it profitable? I don't know. Is it? I mean, so let's use a little bit of our, intellectual acumen. So we have to define what is sustainable profitability and what is short-term profitability. Of course, we have to run a business. People have to pay bills. We understand that. But there is a beautiful balance between the two. So ESG brings an awareness. Okay, so if you have a country that's highly pollutant and people are sick and they're missing work and they have lung problems, they have skin problems, they have deficiency problems and their immune system, and there's a tax on the poor because they have to now can't drink the water and they have to do this, then is the collective profitability of the country high or low?
Well, sure, it's lower, So you're emphasizing the fact on the cost side. You're saying that, we need to embrace that as well.
Overall cost.
Okay.
Overall cost. I think this is the context that we have to approach that. So ESG is about smart investment into your people. Let's keep them healthier. Less missed time of work, less calling in sick. It's about sustainability. And it's about proposing capital allocation that is better allocated. And so we're going to get into it because I'm sure you have questions and we can go into more detail. But does that make sense to you?
Yeah, sure.
Okay.
Yeah.
Okay.
Okay, then. Well, if we are going like in this stream, so you've been saying that, okay, we are pointing the attention that it's quite important to have the ESG within the companies. So we are the veins, of the financial streams. I mean, for the business. So that's why we are the first institutions. I mean, in terms of the banking industry that the regulator is pointing attention to. So that's okay. We are the stakeholders. We've been considered as the investments. I mean, investors. So the other side is the regulator. Do we need to point the attention and share that responsibility with the business itself? I mean, those companies who are currently working with us serve within the bank. So in this sense, how do you think? Do we need to point to them already now when we are making the first steps and the rules are not like requirements for us, are just giving us as the recommendation? I mean, from the regulator itself.
Well, listen.
Or
Yeah.
Or we should start from the very beginning, just from the educational side. I mean, before we will come to the regulator, or before we will come to our clients, to business, we need to who need to explain to them what does it mean, because of course they do have an understanding,
Of course.
but the question is whether they have really deep understanding, and where do they see those connections between, let's say, ESG and sustainability and good capital and more possibilities, or not?
So what you're really asking is, what is ESG in modern Kazakhstan?
Yeah.
That's really what you're asking. Okay, so a couple of things. ESG in Kazakhstan is already a working architecture. So first we have to understand that we are no longer in the ideation of ESG. It's already in the working architecture of the country. We have the market plumbing. Just look at the AIFC, that's being a great leader in this, the Green Hub, AIX, CASE. And we are adhering to EU standards, ISSB, and I'm sure we're going to go into a lot of detail there. So to answer with more precision, since it's already part of the working architecture in the country, the question is no longer if we should, we must. So then how do we address that, which is a great insight from your side, Jenna, is that this is where banks can actually keep to their core businesses and just advise as advisory fees your clients. So this is actually a way of making money as well as doing good, because how do we make money? We do advisory, right? Advisory fees are part of investment banking and banking. So you can advise your borrowers, which gives stickiness to your business model. So it's a relationship between the regulators, the banks, and the borrowers. It has to work together. But if I were to look at this question 5 years ago, that's a completely different thing, because there wasn't this working architecture. There wasn't this idea of what are the rules, what are the metrics, what is the framework. That's already there. And it evolves, but it's already there. And soon, through financial reporting, IFRS, you're not going to have a choice, but you're going to have to disclose. So the question is no longer, do I want to, or how would I want to? Banks need to take the leadership as advisors to advise their clients, which is part of your business model. So you're actually expanding your advisory fee pool.
Since you're giving us a hint on the side of the metrics, Marcia, so there is a question, about the metrics themselves. So what are the main streets? I mean, in terms of the ESG metrics. So one thing is that we can give some good metrics saying that we are perfect, because many are not understanding what is that. But generally, can there be a misunderstanding on the side of the market? So how they would be satisfied with what we are giving to them? I mean, in terms of maybe there is a falsification. Well, we are speaking frankly, Marcia. This is the problem we can discuss.
Listen,
and people will be listening.
I think that, we have to have this disclosure. That's why I looked, because I like the fact that you're talking about this. Listen, I think what you're really asking in the question is about GRE, quite frankly. And let's just define what that is. That's Global Reporting Initiative. And what that does is it focuses on material topics. Okay, so I think that's just, we're going to throw a lot of acronyms out, but I kind of want to define it so everyone can follow us, right? And when you think about that, these GRI was created so that companies can report consistently, and really show their real impact on the economy, on the environment, on the people. So in terms of matrices, there are already matrices in place that allows for disclosure and transparency. So it's a matter of borrowers understanding what those matrices are, and different industries and sectors have different ones, but overall, and it's really measuring that real impact. So it's different for a steel company versus a bank versus something else. So that's number one. So we have matrices to look for that. Two, these material topics have to be analyzed sometimes by third parties, which takes away from what you're saying is falsification and fraud. In the past, companies could turn around and say they're green, and they weren't green. And some of these bonds that said they were sustainable and weren't were actually taken off of indices or dislabeled, which caused a lot of problems with investors. That's called greenwashing. So that concern has been consistently and is consistently part of the focus of regulators to make sure that disclosure is done accurately and transparently. So I think the first way of looking at this, are you adhering to GRI? And how are you evaluating real impact from your sector and your business practice? And how is that comparable across the globe? And so that's another evolution in ESG, is that there are data banks, especially in the European Union, which is really taking this in front, where companies can compare, more importantly, investors can compare. What's the impact of a company in Kazakhstan versus a company that's in Indonesia, also an extract company, versus South Africa? And how are they tackling their material topics, right? GRIs and other such things. So the ability to compare gives comfort to investors and gives comfort in the analysis. So I think that's what's important.
Marcia, what do you think about the benchmarking? Well, it's quite difficult to make the standards for like a whole world, globally. I mean, even for Kazakhstan, since we are working with maybe IFRS or whatever, I mean, still to satisfy those, overall standards, like having different economies. We've been discussing before, that we are transition economy. So, difficult to sustain all the needs. That might be,
in what way? What do you mean?
To satisfy the needs of the standards that are globally, for example, okay with the investors, even if we are talking about like single country, Kazakhstan. So, comparing with some other countries, maybe Kazakhstan and other businesses, quite difficult to get.
I don't know if I agree, but tell me.
Not only, I think the major issue may be like metrics, they cannot be universal, I would say. Because still we do have different economies, and those metrics, they are not only applicable, but also they are doable by the bigger economies, not doable by the smaller ones, those who are in transition. And the issue is, like, for example, is for our understanding, we are disclosing something, and we do understand not only the reality, but also the meaning of what we are disclosing. On the other hand, the investor from somewhere, he is not obliged to read. He will not have a tool to understand in details what we mean. That's an issue.
So let's unpack that. I heard similar arguments when companies around the emerging markets were told they have to adhere to IFRS accounting standards, okay?
That's
Let's just bring it to Kazakhstan, Kazakh local accounting to IFRS. I heard the same exact issues. And why did we have to go to IFRS? Because we wanted what?
Well,
a wider pool of investors to come in, and Kazakhstan wanted to integrate itself further in the global financial fabric. Exact same issues. How do we do disclosure? It's different in Kazakhstan. This is now and what has happened? Most companies report under what? IFRS. And what did they use? They used accounting firms to help them. The PwCs, the KPMGs of the world, and Deloitte and what have you. Why should the approach be different? So should there be, so I think you're also asking, should there be some leeway in social responsibility, definitions? Well, of course. And that's what you see in IFRS, right? Is it rules-based or not rules-based, right? There's interpretation, but it's within guardrails. So I think there could always be some interpretation within a company, within an industry, within the country. But just like we adhere to IFRS standards, there are guardrails of interpretation which still make people comfortable. So yes, you can. So you can have material impacts. You can anchor that as long as it's within, the standards that are there. And I don't think it shifts the burden necessarily to companies or countries, because if you follow ISSB or G or I accepted standards, it's the same applicability as someone saying that now I'm going from Kazakh standards to IFRS. It's the same concept. You're adhering to a framework. And that took companies needing to understand, their accounting departments needing to understand, their auditors needing to understand. Am I correct? So it's the same concept here. But the difference and the similarity is that you already have the definitions, you already have a standard that the world is adhering to. And so when I open up a statement that is under IFRS in Kazakhstan, I can compare a company in Indonesia, or a French company, or a South African company, or an American company, or a South American company. That's what unified standards do. It brings down due diligence costs, speed of making investment decisions. So not wanting to understand how your company, your country adheres to that excludes you from the global market. So just think about IFRS and accepting that. This is the same concept. Regulation boards, standards, same tension, same concept.
Okay, and if it is so-called rules or obligations or some kind of universal metrics, in terms of understanding, it became clear, and now it depends on investor themselves whether he accepts these risks or not, right?
Well, yeah. So when you adhere to a standard disclosure and transparency, you level the playing field in investment discernment. At the same time, you reverse engineer discipline within the own, say, borrower or company, because they have to do business and understand what's the balance sheet, what's the income statement, cash flow impact when they report. Same concept, going from Kazakh accounting to IFRS. Okay, so the investor opens that up and now is able to compare. It's able to, the investor, he or she, is able to make a discernment. Whereas when something was not adhering to standards that were commonly understood, how do I compare a company that is reporting under Kazakh accounting versus Indonesian accounting or French accounting? Oh, it takes way too much time. And this is what also we need to understand, is that every borrower is competing for capital.
Exactly.
You're competing for capital. So if you're making things complicated, you are diminishing the pool of investors. How is that smart business? How is that smart business?
That's actually the point that we are trying to emphasize, because not all the banks, well, Marcia, let's just consider the fact that lately we've been to some of the conference, and there was a statement that out of 23 banks down here in Kazakhstan, we are just talking about our business in here, 15 are already in the list of those who are preparing somehow the reports. So somehow they are trying to, they are adjusting their approaches. But we do not, we need to understand that we're in a competitive market, as you say. We are all competing for the capital.
Correct.
Yeah. So this point, do you think that capital is the one thing that is adjusting, like bigger or smaller banks, to approach the ESG concern? Does it mean that it depends on the size of on the scope of the institution, how fast we are coming?
No.
The ESG.
No, it doesn't. So So let's unpack these questions. And by the way, I love the depths of the questions. They're very thoughtful. And I'm glad we're getting into it because I think the audience deserves, to have thinking minds and practitioners really taking the time to.
That's why you're here, Marcia.
Well, thank you for the invitation.
Thank you.
So let's unpack that. Capital develops because of trust and how it's deployed, the transparency and the disclosure. There's an economic multiplier effect that well-allocated capital can bring. So for example, big banks, little banks. I could argue that little banks may have more agility in seeing opportunities that may just be too small for big banks, right? So think about portfolio investment. I may see a great startup, but that startup only needs $500,000 and I'm running $1 billion. I love that startup, but it's too small. Even if it gives me 10x, it's not going to move the needle in my total return. A smaller bank can turn around and go, well, wait a minute, I see a pocket of inefficiency. You see, this is what, I'm going to talk to the audience now. This is what you, the audience, should be thinking about. There are pockets of opportunities in ESG that entrepreneurs should solve. Solve it. Bring ideas. There are so many opportunities out there that you can use your intelligence and your entrepreneur spirit and create solutions that will be backed by capital. So, for example, most recently, there was a microfinance deal that was a gender bond. When was the first time was that the first time?
Well, I have never heard of it.
That's my point.
Yeah.
Is it a huge bank? No, it's a microfinance. That was agile thinking. Let's bring inclusivity to a market where most microfinance funding around the world gives, which are to women. Let's wrap it up in a bond and let's provide capital so that we can develop the economy and create financial inclusivity, which is part of ESG. That was a smaller player thinking agilely, looking for an opportunity and tapping it. Until then, you didn't have that. And if the framework of ESG weren't apparent, you wouldn't even understand why they're doing it. I'm going to go back to this. We would not understand. So microfinance is ESG. And people are like, what? Yeah. What does microfinance do? I'm going to ask you the question. What does it do? Why is microfinance ESG?
Yeah, they're taking risks which are not kind of taken by the bigger banks, by the banks.
But what kind of risks are they doing?
Different type of risks, but that's mainly because of doesn't mean like this is again because of the regulation.
No. Microfinance is what part of ESG?
Oh,
it's S.
Yeah, yes.
It's financial inclusion.
Yeah, sure.
So when people think about ESG, they're like, oh my God, what is that? We're living through many examples of ESG. What we've just done is create a wrap around it to explain. So microfinance is a form of ESG because it's social. It's bringing inclusion, financial inclusion. And what does financial inclusion do for a country? It diversifies the economy, makes it more sustainable.
So you mean we are moving niche? Because we are not we, but the ESG is helping people to understand some of their new opportunities.
And microfinance is an old opportunity. It just falls under the wrapper. See, so that's why I'm trying to demystify ESG like it's something new that a bunch of people that sat in a yoga position came up with. It's not. Okay, so microfinance have existed before everyone started speaking ESG, but that's a form of ESG in my book. And so, because ESG is about gender, it's about a disability, it's about inclusion. It's not about being against men, contrary. If the economy is better, everyone's better. So it's about financial inclusion of all sorts. So we tend to create this mystification of ESG, and yet we've been living through it. We're just now putting a wrapper around the candy.
Sure. Exactly.
Okay.
That's actually what we've been discussing through all these programs with different discusses. We've been trying to say that, it's around actually. The point here for the ESG, for the department of ESG within any bank or institution, is to wrap up, as you say, to open up.
The greatest problem where a lot of people have a stumbling block with ESG, because now because it's becoming unified, now because people are saying, well, we have to have a discipline. So I'm going to go back to the original. Economies only grow when there's capital investment that has a discipline behind it. You have to be disciplined. And if you have a discipline, you have a methodology. If you have a methodology, I can follow you. I can agree or disagree to invest, right? I can agree or disagree to engage in the capital. And so what's happening in ESG, we're getting all these desperate microfinances, and we're bringing it into a label. And what we're turning around is that we are giving it a framework. We're giving it a methodology. We're giving it a standard like IFRS so that we all can speak in the same language. And because of that, it's exploding. So remember in the old days when they talked about social impact and entrepreneurial impact? That's ESG in my book. So we have already teased and talked about this. So for example, Kazakhstan is a transition economy. And many times, people say, well, ESG is not good for transition economies. It's terrible, and we should rely on our extraction, and we should rely on coal and everything else. Okay, rely on that. ESG doesn't preclude, exclude, or punish transition economies. That's fake news. But let's be smart about it. If you're a transition economy, you should use your coal. For sure.
Of course.
But instead of looking at short-term profits, you can look at ways to use your coal that are healthier. Like deal with the coal ash. Why is it just sitting there? You can use a coal ash. You can there are technologies that are looking to take coal ash and actually allow for it to produce silicon or alumina, depending on the constitution of the compounds of your coal. So you can take coal ash and extract products, diminish the amount, and make it healthier. So, especially through CO2 capture and other such technologies. So actually, for an entrepreneur and for smart money, they should look for solutions for transition economies to be able to pollute less, have more efficiency in the usage of their coal, and be able to create byproducts and still be environmentally, government, and socially. Because if you're not just leaving coal ash out where they're polluting people, then right there you're helping with the S in ESG. So why would anyone say no? It doesn't make sense. And especially and so it's good that Kazakhstan, for example, that said economy first and culture. And what's that tension? Well, yes, when you're coming out of the USSR, the Soviet Union, and you're creating an economy, of course you focused on economy to raise the people and to be an independent country. But it's not a sequence. So it's not as if you have to do economy and then culture. Because even in the speed of economic development, there was a culture there. So now the culture is evolving to ESG, which we've been discussing, which allows for smart applications of capital and opens a next chapter of economic development, economic depth, social inclusion. And what does social inclusion create? A greater economy. So when you're looking to have a 7% GDP that is actually margin driven, value added driven, well, then you need to create the value in that GDP. And the way you do it is by having smart capital allocation, and through the wrapper of ESG that gives you green technology opportunities, that gives you all these different aspects, even transition solutions that do things better. So I want to disabuse people that ESG means that transition economies should just get up and forget about their coal and extraction. That is exactly not the point. The point is to be smarter about it. Is that kind of helpful?
Yeah.
That's very helpful. Yes, yeah.
It is, really, it is, because that's what we are also talking about. we are talking about in order to make people think about not implementation also, because they already do it. But the question is how much they know it and how much do they understand that it's kind of real.
It's already in the process.
It is real ESG, right? And not only, and what we are talking about also, it's not about knowledge itself, but also it is a great opportunity. It is a great possibility to implement not really something new, but something really necessary to do, I would say. Because otherwise, what we are trying to explain to all our clients, to our colleagues, to business, like otherwise we will have no progress, and otherwise we will not be we always be in transitional economy, I would say. But the question is whether we like to become, I don't know, smarter, to become better, to leave something good to our children, and so on and so forth. And this is how to connect it to business, because nowadays we need to think about it in order to become the future better in something to live.
See, I want to pick up, if I may,
Yeah, sure.
on your comment, because I think it's important. You know, timing is everything, right? And money and it's that timing is everything. So there is a game theory aspect to what you just said in terms of timing. So 10 years ago, there weren't many people disclosing. So there was a cost disadvantage of being that company, that country that would lead the way for disclosure, okay? But in the principle of game theory, you want equilibrium. So today, people are disclosing. So if you are disclosing alongside the framework, you're not disclosing more or less than anyone else. So you are in equilibrium. But if you're not disclosing, you are out of the equilibrium.
Okay.
So just bringing game theory to this conversation.
Exactly.
It's not the time to ignore. In fact, you could have played that game 5 years ago. You can't play this game. Game theory is against you. The Nash equilibrium is against you today.
Exactly.
Okay.
Think about it in this way. What would happen to a company that wanted to go to the global markets and did not have IFRS accounting? What would happen? But they would not be allowed to go to the market.
Yeah, that's the same what I'm talking about. The
Exactly.
question is, but on the other hand, whether they like to go to the capital market or not.
Well, true. So for example, so let's say you don't. You want to stay in your local accounting systems and you don't want to, that's fine. But you're capping your growth.
Yeah.
You're capping your growth. So again, you're not playing the equilibrium. Game theory, equilibrium is not part of your thought process. And so obviously if you're a mom and pop shop, we're talking about something different, right? But we already talked about microfinance. We already talked about inclusivity. We already talked, there's a different approach to that. And there's these agility and opportunity gaps. But I'm also talking about Kazakhstan and largesse and big companies. So if you are not participating, you're not in the equilibrium of game theory.
Marcia, are you saying, like, generally that ESG is about the opportunity cost today?
Yeah.
For business?
Yeah.
So that these are the optimal solutions?
Yeah.
Because you cannot be right or wrong, maybe just for the present. I mean, not you yourself, but generally like those who are accepting the ideas of ESG. But still they are doing it because they do understand that if they are omitting it, just for the time being, they can omit some of the potential. Like the same way as you said, okay, you can do the business within your country. You're not going abroad, you're not taking like any capitals or whatever. But this is not the right way to grow.
Well, it depends. Okay, so there's a cascading effect. It depends
Yes.
on where you are, right? But again, you can even do something that is so personal, which is a gender bond to bring in, women entrepreneurs into the economy. That is so local, so personal, so Kazakh, but it still had interest from abroad in participation of that issuance. So, because it adhered to a framework, so nothing is too little. Is your mindset too little? That's the difference. Now, listen, a lot of people have taken advantage, and I don't mean this in a bad way, of the status quo. But the call to action of the country is if transition it's not about punishing transition economies. It's not about doing that. It's actually creating better ways of waste management, and just that is a huge business on its own. Better ways of capturing CO2, better ways of looking at coal ash, better ways of this. Why not do it if you're trying to have sustainable and value-added GDP? So that's bad business.
Yeah.
We have a saying in Wall Street: you never leave money on the table because someone will pick it up. So.
Right, Marcia, thank you so much for this one.
So, but sorry, because I'm thinking about this.
Yeah, John.
Question is like, I would say on the government level, on the country level, yes, it is kind of understandable. It is an opportunity. You should not lose this opportunity and so on. But how to make people think about this?
I think Kazakhstan is actually a lot further in that than you think. I mean, as I said, look at the work that the AIFC is doing. Look at the opportunity. I mean, the AIFC represents the country. Look at the issuance. So when I was on the board, and I just stepped down after 10 years on the board of the Development Bank this March, we did the first sustainability bond. That opened up an entire benchmark in the world. So Kazakhstan now has a sustainable bond, which means others can follow. It also did green bonds, and Kigak did obviously green bonds, and the moon, etc. But my point is that we are already advancing in this. The question is no longer to convince the government. The government is behind this. But to be fair, the government has to balance near-term issues with long-term issues. That's why there's always a beautiful tension. It's not a rejection. It should be worked in tandem. And with that comes opportunities. So it's not about, again, ignoring the subset or the main industries and the industries. Continue to let them impact the economy. But it doesn't stop the opportunity to create problem-solving entrepreneurial opportunities or intrapreneurial opportunities that help the transition be more effective and help you be more responsible to your sustainable profitability and your impact to the country overall.
So you say that the inclusion is important, yeah, Marcia? We just emphasize into the fact that, for example, you've been saying, okay, that big companies, they're not allocating a lot to this type of projects, just in the sense that they do understand that the return is not high for them, just like an assumption. The other thing that you've been saying is that, for example, smaller entrepreneurs, for them, this is an opportunity.
I want to clarify something. So DBK is huge. Development Bank of Kazakhstan is huge. And when I stepped down in 2024, we invested $3 billion into the economy, right? So a lot of renewables, QICM on the board, renewables and other such things. I don't believe that big companies believe it's not profitable.
Okay.
I don't believe that because they see that there is a pocket of investors that want to participate in everything from green bonds, sustainability-linked bonds, blah, 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 and loans. So in fact, the capital financial discipline of ESG allows for you to borrow money cheaper. So just in intelligence, 20, 30, 40, 50 basis points is a lot of impact on the bottom line. So if you adhere to the frameworks, the matrices, the GREs and ISSBs and whatever else, IFRS, Scope 1, Scope 2 requirements, whatever is applicable to your business, you have a larger ability of funding investors that you had never met before, and you can borrow cheaper. If I were a board member of a bank and someone was not taking advantage of that, or a company, I would be really upset.
Yeah, sure.
And that's why one of the things I did was spearhead this ESG project in Development Bank of Kazakhstan. And now they're just amazing. They're actually invited globally to speak. So no. So no, I think that smart decision making, if you can borrow the same amount of money cheaper, I would do that every day, twice on Sunday, and it would make sense. So I don't understand. So I push back on this because it doesn't make any sense to me, even in cost management.
Sure, but what about those who are smaller businesses? They simply do not have like this time for ESG allocation. I mean, because they are in need to like sustain their businesses.
Well, that's why government. So first of all, that's why I think this is great that you have this program, because even small businesses can look to it.
Yeah.
But that's why there should be learning hubs. I mean, banks should be having learning hubs and etc. Because again, here you have women who probably will never meet you guys, would never think they're worthy of investment, just got money from a gender bond. They didn't have to learn. Listen to what I just said. They didn't have to learn how to report. But because they were within a category, they were investable. So we tend to just take a brush and just. You really think that these small businesses are being required to? Are you an ISSB, ESPBB, GRE? Do you really think that's how that microfinance money is being allocated? Of course not. But top down, it's allocated because it's gender based, it's inclusive, it's part of ESG, and they're going to obviously have matrices that they have to return to show that they're profitable. Of course, there's all of that. But there isn't this burden that they need to be out there running around being able to speak about the EU, ETS. I mean, it doesn't make any sense.
Well, Marcia, so then we are returning back to the point that the bigger institutions should take care of those smaller ones because they are in the chain. So since they are not able to take the whole niche, they can't be allocating like for small ones, but these concerns of ESG features, for example, will be going through them to the smaller businesses. Do you think it's right?
I don't think that big banks need to. So if small businesses are not part of your banking business, it shouldn't be part of your banking business. Worry about ESG and helping your bigger clients understand ESG within its own concept. That's one of the things the Development Bank is doing. So ESG within Development Bank we can control. Then how do we push down the matrices to our borrowers? Okay, how do we instruct how we help them? So you should keep to your business model. There's plenty. And so this microfinance kept to their business model. I'm not saying you should be doing microfinance. That makes no sense. That's not your business. Within your business, bring in the discipline of ESG, so increase your market. So let me tell you something. When there's more resilience when you become an ESG knowledge center for your borrowers. There's stickiness. They're going to come to you. It's so you're less fragile during economic shocks. You have expanded advisory fees. They're going to come to you for issuance or for borrowing. So the knock-on effects are all positive bottom line. So why not do it?
Yeah.
So stick to your core business and adapt it to what it is and make more fees. Have add-on businesses. Do green bond issuance advisory, sustainable bond issuance advisory, whatever it is you do. You don't have to change. Let the microfinance people do microfinance. Let the other people do the other thing. So within your competency, and only within your competency, should you take on the ESG initiative and explain to your borrowers and your clients, just like an investment bank explains how to come to market. This is not new. It's just explaining something new, which is already becoming, as I said, given the market size, a major market. So you're not helping your clients if you're not in the frontier. So again, you're not in the game theory. You're in disequilibria, which is not smart.
Very well. Well, Marcia, another one question in this regard. So, do you think that we're not just speaking about the banks. Any institution who is taking the lead in terms of the ESG approach, do they need to define for themselves, as for the business, what they need to take first? I mean, the ESG is so broad. For example, DBK is clear, yeah? You are responsible for lots of different projects.
Actually, it wasn't clear. No, it wasn't clear. No, it wasn't clear.
Then give us some hints on your personal examples and recommendations, please.
So the development bank had to grapple with, okay, so I lend money, and I can't force the borrowers at this moment to do ESG. And I have legacy loans that don't have any borrower level matrices. So how can I get an ESG rating? That was the first thing we had to grapple. And so we did advisory, and then we saw that there is a methodology from the DBK level. Okay. And so you look at the different, criteria and et cetera, and you adapt it to yourself. But there is a framework. The Development Bank of Kazakhstan is not the only development bank in the world. So how did the ADB do it? Asia Development Bank. How did another development bank? And then you look at the second stage is, then how do you incentivize your borrowers to understand? And then you may in the future have, I'm saying banks in general, incentive programs. If you apply these matrices, or you tell us what are your matrices if you're still a company, blah, 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 that you can get better funding. Why? Because it also helps the rating for DBK. So in fact, DBK has high ratings, right, in the Fitch. So which means that DBK has more ability to get more funding, and it's a life cycle. So it's, again, smart business.
Well, right then, good, very well. So, I'm still willing to return back to that one.
Let's do it. Let's talk as much as we need.
Do you mind to tell us some hints on the way how we need to approach the top management, for example, of the companies? DBK is as you said, yeah, it's not the only development bank. There are a number of them, worldwide. So that's why it's clear that the top management is understanding the idea of ESG. So how do we incentivize, the compensation schemes? Or do we need to make, some inconveniences, yeah, so-called?
How do you put KPIs?
Yeah. Tell us about your example within the DBK, how that worked.
I won't go into that because that's internal.
Okay.
KPI, right? So I don't think that's correct. But I will talk about KPIs in general. There are easy KPIs depending on your industry in terms of, carbon emissions and, how many women, how many older people, how many disabled people that you have. One of the projects I will say in DBK that we did when I was there is that we went to universities and we made sure that disabled people were part of the potential internship pool when we were addressing it. If you're intelligent enough, able-minded enough to get to Nazarbayev University or MNU, why aren't you a candidate to do an internship or get hired by DBK? And so we did hire people, person in a wheelchair at the subsidiary IDF, and someone that had other issues in our technology, and hopefully that continues. That's also part of ESG. So, sometimes people exclude because they're scared and it's kind of silly. And so, imagine including all these people, how that changes. If you're intelligent enough to get into a top university, why aren't we looking at people? We all sit.
Yeah.
So what's the problem with someone in the wheelchair?
Sure.
Okay, it's not like you're a fitness trainer. Okay. Yeah. So, it's a mind shift. It's really silly, and it's sad, and it's shallow, and it's sad when people overlook human capital. So human capital development is not just for able-bodied, it's for able-minded people. Ageism also is kind of silly. A lot of people that during my 10 years there that we promoted were not only women, but were older people. They have institutional knowledge. What's the problem with, why is there an obsession of only young? That's silly as well. It's really bad business sense. The beautiful tension, the equilibrium happens when you have wisdom and maturity with professional development, and that comes together. Exactly. Okay, so KPIs. So there are easy KPIs. And then there are KPIs that one has to be very, very, very conscious of is design creep. The biggest issues with KPIs is that you don't want it to be only a personal privilege or personal reward, and it doesn't have ESG strength or teeth. So in other words, it becomes a personal thing, and it's not actually a business impacting thing. So I think the biggest issues with any KPIs, and in all the boards I sit, we review KPIs. I said, this KPI makes no sense. This KPI makes no sense. And I'm sure you guys have that experience too. So KPIs define action. So it's KPI design that's more important. And that depends on your business. Are you a microfinance lender? Are you a bigger bank, and et cetera? So I think, so I'm not going to go into how a KPI should be structured. It's how do you do lending? What are your businesses? What are your impact? Do you want to get rated to have an ESG rating? So if you do, what are the things you need to impact? And you have to inculcate that in the culture. And make sure that the personal KPIs don't have moral hazard issues.
Okay, gotcha.
Does that make sense?
Yeah, sure, Marcia. Well, thank you. Yeah, I guess we can sum up. Yeah, this part of the discussion. Well, I know you've been telling me that you are not about to go into the policy to discuss the ESG matters. Still, there are concerns, yeah, in terms of the ESG application worldwide, because there are different opinions. So if you give us some hints on that, I mean, your opinion on that as well, because you are the citizen of the United States.
So you're asking about EU versus USA. Okay.
EU, yeah, but we know that, for example, in the Middle East, in some of the Asian countries as well, this approach is growing really, really fast, and it's broadening. So, but
ESG,
yeah, we are discussing the sustainable ways of making the business. So, yeah.
So I said that ESG wasn't, shouldn't be looked at as if through a political lens. So let's address your question. Okay, so you have two things happening. You have the EU that is conforming, bringing up standards. Again, not to kill people with acronyms, but ISSB and others. So we're not going to go into that because we're going to lose the audience and definition. Maybe it's good to have a glossary at the end of terms so people can look up. But you see that unanimity of standards, and I keep going back to accounting that makes things, understandable, intelligent for investors and for borrowers, right? And for banks and for everybody else. Great. That's happening in Europe. The last I checked, Europe was a big trading partner of Kazakhstan, and more so than the United States. Okay. Italy being the biggest. And so when you look at AIFC, is what common law English? Okay. When you look at the regulations that you're adopting, taxonomies, they're EU. The regulations, EU. Your regulators are looking at EU. Do you keep hearing what I said?
Yeah.
EU?
Yeah.
EU. Did you hear it again?
Yes.
EU. Okay. In the United States, we have a fragmented approach. Yes, the SEC does have certain policies, but yes, and under this administration, it seems that the application has been delayed. It seems. But states have the ability to do their own ESG. California, for example, and others. So there's a fragmented approach to this. But what I want to make sure that people understand, there's a strategic element to ESG. With all the turmoil in the world, some of the most interesting private capital investments continue to be in renewables because people are looking for localized energy security. We used to talk about food security, which, by the way, is also ESG. And now people are talking about localized energy, so energy security. And that's important. So in many of the extraction countries in the world have the following policy. I'm going to export my oil and create renewable internally. Because one day that's going to go. The sun hopefully will continue to shine. The wind will continue. If we don't destroy, by climate change, then climate is changing. We don't become droughts, hydro, but that's infinite. That's infinite, and even nuclear. That's infinite. The other isn't. So smart countries are having a dual approach. I will export natural gas as much as I can, but make sure that my localized energy sources are more sustainable. That's smart business and smart policy.
So it's our solutions. I mean, we are deciding whether we are approaching that or not. I mean, everybody should be responsible.
Yes, you make your decisions based on your needs and future. It's not to make friends with people, and it's not an antagonistic approach.
Yeah.
It's just smart business and smart policy. So that's what one should be doing.
Yeah, because we've been always saying during the whole episodes that we've been taping that the ESG is for the first time is the main thing for the business. I mean, ESG is for the business. You've been making some hints on the corporate social responsibility. That is also part of the ESG as well in the beginning of the program.
Yep.
But generally, some of the consultancy people who've been in this program as well, they've been saying that ESG is for the business. Well, as you said,
it's also for government.
For the government.
Well, I just explained. Localized energy sources is a strategic decision by government.
Okay, let's make it maybe a little shrinker, in terms of the governance. So let's come up to the point G, we are speaking about the governance.
Yeah.
So how do you rate it? I mean, for example, you've been working for DBK back again. So you said that, does it truly depend on the governance itself or the understanding within the company? Or the company itself will be doing since the top management is accepting it?
I just want to make sure we go. So I said that, you know how you said that ESG is for businesses? I also said it's for government. Not just governance.
Okay.
Government. So localized energy is a strategic government choice. Okay? It's smart because you want to be less dependent, right? Okay. Especially with so much turmoil. Now, going in governance. Sorry, what's the question on governance?
I mean, is the point should be concentrated on the top management itself, so they will be giving us some hints from top to bottom, so that the company itself will be implementing the steps of the ESG within the company itself. Let's assume it's
governance only works when there is top leadership and bottom adherence. Top leadership needs to be intelligent enough to listen to the people that are actually doing what you're asking them to do.
Okay.
So if it's just a boardroom conversation, it will fail. Okay. That's why when I was at DBK, we invited not just the top people of departments, actually the middle level people. And we would sit them around at a table with the board, with me and the other board members, and we would say, tell me how you define risk.
Good.
So autocracy doesn't really work because everything's culture, everything is a movement. People need to understand risk. If you walk down the corridor of your bank or any bank, since we're talking about banks, and you ask someone in the elevator, what is risk for this company under your control? And if they can't answer it, you failed.
Exactly.
You failed. Period. Rethink your job as a leader. So a leader's job is not just to throw KPIs that people go, I have no idea how this is applicable. It is to explain, to actually engage people in town halls. Have people think, send emails. Okay, I'm going to sit down. You're going to have a moment with the deputy CEO, the CEO, the independent board members, whoever you have, and we're going to sit down and tell me how you see risk, middle management, low management, your directors, your managing directors, however your structure is, your analysts. If people cannot articulate what risk means in their department within the context of your company, you have failed as leaders.
Well, we've been discussing
that's
because
that's a lot to, I would say, to rethink.
No, it's not. It's risk management. See, risk management is not just going, oh, what's the financial? Well, let me look at the model. Let me look at this. That's part of risk management. But no one's omnipresent. No one here is God, right?
Sure.
So you can't see everything. So you rely on other eyes and other minds to have your back. Well, if you don't tell them what they're protecting you from, how do you move together like an army?
Sure. Well, that's actually exactly the moment that we are trying to do. Yeah, I mean, Marcia, you've been telling us that's important thing of the ESG is the communication and disclosure of information.
sure.
Yeah.
For
So
sure.
communication not only externally, but for the internal side, because if there is no understanding for those who are trying to run up these ideas into the business, so that's the point. Hopefully, like all the people who are watching us, they will be making note in this regard, since the senior advisor to the Prime Minister of Republic of Kazakhstan been mentioning these things. So yeah, thank you so much, Marcia, once again. And another one thing in regards to the disclosure of information. So there are always two sides of the coin, yeah, Marcia? So
Is there?
It should not be.
well,
Is there?
at least in Kazakhstan it's so. So I'm just emphasizing to the point that whenever we are disclosing the information, we are making something good, yeah, maybe for the understanding, for the communication as well. But are there risks of disclosing the information for the specific unit, specific institution? I mean, for example, Altyn Bank, when we are disclosing the information. In terms of the competition, Marcia.
So we go back to, and okay, so this is, okay, I'm glad you asked this because it's nuanced. Remember when I talked about the Nash equilibrium, which is game theory? What was the whole point? Equilibrium. If you follow the framework that's out there, that everyone has to adhere to, then you're not disclosing more and you're not disclosing less.
Okay. Very convenient.
That's what disclosure means. So when you do your IFRS accounting, are you saying, you know what? No, I want to add more. What are you doing? You're listening to the accountants, KPMGs, PwCs, Deloitte, whoever you use, and they're saying, they're looking at your accounts and say, okay, this is how you disclose this, IFRS, whatever it is, 1 to whatever, and this is how you interpret it. And then you go back and forth.
Okay.
It's the same concept. I've never met anyone that says, you know what, I want to add additional information that I'm not required to do.
Here we are.
So it's equilibrium. So now maybe your question is, other banks are not adhering to ESG. Well, then you have a competitive question to ask. Do you want to open this bank out for international money? Do you want to become a benchmark? Do you want to be a leader? I mean, that's a personal question. I don't know. I don't sit on your board. But my question is, do you? Do you want to be issuing green bonds? Do you want to be an investment bank that's issuing green bonds, bringing your companies to do green bonds, sustainable bonds? Do you want to create a capital market that doesn't exist? Do you want to be that underwriting leader? I don't know. Do you? That's the question.
Here could be one more issue, I mean, about this verification. Even if you were disclosing on standards, this is not about disclosure only. If you are giving some information, it is in frames. It is as per the methodology, how it should be disclosed.
Exactly.
Yeah, that's clear. But how to verify it? I mean, I could write, let's say, whatever I want to be kind of really.
You verify by third parties, like you verify through KPMG, PwC, that your disclosure for IFRS is accurate, right? They give you an opinion.
Yeah,
First
on
part of the
IFRS, right?
So they give you an opinion, right?
Yeah.
That says that this is clear.
Sure.
Same thing. You engage third parties, and there are many that are able to give a third party opinion on the veracity of your disclosure and the accuracy of your disclosure. That's everywhere. That's common practice.
But there are some issues even in disclosure, because you should not be connected somehow to this third party. That's understandable. But they should verify it, because on IFRS, you could verify the figures. This is about the figures. If you are talking about verification of some ESG principles or how you disclose and so on and so forth, still it should be some kind of, you cannot double check it on figures.
Well, let's look at the basic. How many women are working? Yes, you can.
Okay.
How many women in positions of power?
Okay.
Yes, you can. How many women have been promoted? Yes, you can. How many people are older? Yes, you can. How many people are disabled? Yes, you can.
Okay.
All that's disclosable. I mean, we actually at DPK we would show that in the annual report. I mean, the only thing you need to do is get the annual the annual report in DPK. You see all this information. You can also say how many renewable, another disclosure, how many renewable companies have we lent to? That's part of your ESG metrics. So there are many things that are quantifiable. But you know how many debates I've had? Because I used to be the audit chair and the risk chair and the strategy chair at DBK and audit and risk now in KC. How many conversations you would have with auditors going, I don't agree with your, with how you looked at fair value and what's the right discounted cash flow for Kazakhstan and should it be? I mean, there's always back and forth. It's not an exact science, but there's a methodology, just like accounting. I keep going back to accounting because that's the one thing that every business knows.
That's exactly.
It makes it easy, makes it tangible for you to understand.
Sure.
It's just different ways of looking at that. And I want to talk about communication because communication is risk management. And communicating to your clients communicating to you, communicating to the world is actually risk management. It's operationally smart. It provides for long-term adherence. It takes away fragility or minimizes it. And it's been proven by many studies that banks that actually communicated, that disclosed, that were transparent, actually weathered stress situations better than others that didn't. Because when people don't know, they get really upset. Okay.
That's wonderful, Marcia. Well, we could probably talk over.
I can see we could talk like for hours on this.
Yes. However, we are having some time frames for the program.
Okay.
Well, anyways, and I would like to ask you, do you have anything else that you can suggest or recommend to us for the business with your experience? Might be in this regard, in the regard of sustainable development. Some hints maybe.
Hints. Okay, so we talked about methodology. We talked about some implementation. We clarified a couple of perhaps misnomers or misunderstandings. But what I feel is one of the most important things for Kazakhstan and others is to incentivize entrepreneurship.
That's right.
Do challenges. Okay, so how do we solve this problem? Do challenges for young entrepreneurs or older entrepreneurs or whoever to come with solutions. This will disclose a huge chain of, and mostly whatever they come up with could be regionally important, can grow as a regional solution. I think that we know about investing in cleaner energies and renewables and etc. But I want to say something about that too. But let's incentivize entrepreneurs of every shape, size, color, sex, age to think about solutions. So really inculcate what ESG means and look at transition economies, our economy, and see how they can come up with better ways of making this economy even greater, okay? Second, I think there's a lot of opportunity lost. I'm really sad about that. There's a lot of renewable energy investments, but the IREC market is nothing. I actually did, I'm also on the advisory board of Valid Carbon. Valid Carbon is creating an imprint in this region. There are reforestation opportunities that banks should be lending against that they're not. There's a lot of opportunities for renewable energy. So IRECs, megawatt production issue. Someone that needs it buys it. A company that needs it buy it as an offset. That market doesn't exist. I was with Value Carbon for the first trade at the AIFC.
Okay.
I haven't seen a lot more development. So every year that all these renewable companies are not selling IRECs, for your investment, they're not optimizing their investment.
But why is that, Marcia? So it's frozen. Yeah, you've been saying that it's only the first one.
Because I don't know, people don't understand, or the banks are not saying, well, listen, this is a revenue line that you're not using, which would create more revenue, which would de-risk our investment or investors. So, I mean, there are so many opportunities that are not being used. I mean, think about it. Kazakhstan is the 9th largest country in territory.
Yeah.
Why aren't we one of the bedrocks of reforestation? I don't get it.
Yeah.
And then sell those carbon credits forward. I don't understand. It just takes one smart investor to start doing that, one smart bank starting pushing that.
That's wonderful, Marcia.
That's true. Yeah, really.
Yeah. Well,
We should not call it insights, but still, it is so many things to what I'm thinking about, or to rethink. I would say too, because actually, I prepared a lot of questions, but a lot of issues to discuss. But now I do understand that maybe my not only feelings,
vision.
but my vision was not so
wide, maybe it's narrow.
wide. It was really really narrow. There's so many.
I appreciate that feedback. So I really hope that this was useful for you as well that are watching. And I really applaud this initiative. Thank you.
Thank
for
you so
having me.
much, Marcia. Not one thing that I've been reading one of your interviews, and you've been giving some statements saying that for the development of the ESG concern, whatever the country it is, there should be people, like entrepreneurs, who should run these ideas into their businesses, but they are not linked to the power. So you've been saying that this is very important.
Correct.
If the power is there, those people who are responsible for that power, and they are linking with this wealthiness, then probably it will not be working. But you are, from the beginning of this program, been saying that please pay attention to the entrepreneur side. That's wonderful. And well, that's actually all that I wanted to say. And I'm thanking you on the side of the Altyn Bank that you've been having this time to come up to see us, to discuss the matters. And we hope that you will be following, doing this stuff, whether within Kazakhstan or worldwide. We know that you've been abroad.
Thank you.
In Azerbaijan recently.
That's right.
Been the speaker as well there. So please proceed with your doings.
Thank you.
Yeah, hopefully it will be generating
Inshallah.
ideas. Inshallah. Yeah.
Inshallah.
Hopefully. So, dear listeners, this is the project, this is the Pro ESG project that we are running on behalf of joint stock company Altyn Bank. And today we've learned something completely new that we haven't been listening from all other discussees for the project. And we understood that ESG is an opportunity cost, or maybe lost opportunities. The other one thing is that it is an optimal solution for the businesses. So whether you're accepting it or not, it will be giving you some ideas whether now or in the future. So thank you for listening. Thank you for joining. Hope to see you safe and sound back again. Bye-bye.